Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So, pretty quiet day. You almost had to really be long overnight positioning in last Friday's surprise gap and go, because within the first 30 minutes we made our highs of the day. Some actually probably made some money fading it, considering the size of the move from Thursday's low to today's high. It's a big travel range, so it wouldn't surprise me now if we try and pack and fill a little bit and rebuild or not. I guess nothing could surprise you in the markets these days. If we just go to the charts, you go right to the the SPX, and this was last week. Last week things got a little dicey, right? This is when you had your outside day. Things felt as if they were breaking within this range. You had the bios getting weaker, the Russell getting weaker, the mid-caps getting weaker. We were losing some of our go-to names. So it made sense that this would follow suit and break. Okay, and then it did. So this break could have gotten you pretty short, but in your mind you could have been like, all right, well, from 12, or 2125 down to below 2080, hitting 2077, big travel range, just have some. And then all of a sudden Friday, engulfed the moving averages and pretty much closed with a little bit of power. If there wasn't much power, you probably wouldn't have seen this get reclaimed. That's why when I come out with like a thesis, I'm like, well, if the market reclaims 1992 to 1994, that means the sellers don't have the control that you would think they'd have, and that's why you switch some gears. And then if you did that into today, you could have faded a little bit, I guess. In the beginning they had to burn out some leftover shorts, and then come in and right near the highs. That's basically what happened. Okay, the high today was 2120, and we closed 2114, a little off the high. So it wouldn't surprise me if if we see some kind of weakness, maybe to rebuild, to perhaps put a tail in and start going a little bit sideways up here for an eventual break to the upside. You look at the spiders. Again, a bit of a topping tail into resistance, and if you look at where where it was on Thursday morning, you had it crossed Friday's high. Oh, I'm sorry, Thursday's high on Friday, which you could have covered in two different ways. I think I was done with it right around my cover was like 209.88. And then today I made a little bit of money back, fading it versus the highs. But again, at this point, I really feel like I don't want to just be looking for cute shorts. I want to try and find some things that could work to the long side, but that remains to be seen. So tomorrow we have the gap, 211.10. So we'll see if we hold above it and stay really tight, or fill it, which I wouldn't be surprised if we did. Maybe come back up and try and do some sideways work before trying again. So today, or starting last week, we started talking about the strength in the financials, that some money rotated out of some sectors into the financials, into some oils. You look at the XLF, this should be pretty bullish, right? This should be a clean break where you had a very tight range and it broke above and closed on highs. And again, I feel like I don't have a lot of energy in my thought process with this because of the trappy type market we have. And this wasn't really done on excessive volume. It was just done on normal volume, if not even a little lighter volume. So with that said, it does look pretty clean. If you wanted a little bit more bang for your buck, the FAS also pretty clean move, broke above this area. At least you should have covered your shorts. I don't know if we're going to get a breakout move back to highs here, but this should get you at least thinking that this head and shoulders pattern that most were talking about is getting broken up in the right shoulder and could continue. And I know last week, unfortunately, I was long JP Morgan for a while, and that has been best in breed. I've gone over the levels many times here on JP Morgan, and I did it in the morning call, I think even today. And so today you had a nice breakout here. This was your earnings move. Okay, came back in. You had a little red dog reversal right here. Broke above this descending channel, held above it, then broke above this 64 and gave you another 70 cents. That doesn't happen that often in financials. And now the 8 and 21 there are curving up, and it's not that extended. It could see some more upside. You look at Goldman Sachs, not leading, but it's a little bit more capital intensive, and here's 200, maybe tomorrow above 200, we get a clean move. The two that I chose is Morgan, just because I can wrap my hands around it a little bit better. Intraday, maybe I'd go after Goldman tomorrow if there's a trade, but it's just starting to clear this area. It held higher. This one had good earnings. It hasn't really run away yet, so if people really start believing that rates could go higher, you would think that this could get at least back up to 39, so you're almost playing a middle here. So this is in the game. It's Citigroup also. I'm in some Citigroup. I would think that for the first time, if this was ever going to have a clean move, now's the time. Okay. Here's this little pattern going sideways above the 8-21 day. Some would even say this could be, I guess, a little bit of a unconstructed cup and handle pattern or an inverse head and shoulders pattern, and this stock has not done anything in so long. Look at this weekly chart. It's been stuck. Oh, actually, go back to the weekly chart for a second. I actually was looking. That's actually, that looks pretty good. You go to the weekly chart, and it's done absolutely nothing. So here's your little cup. Here's your little handle. If this bank move wants to be real, why not get to 57, 58? But again, this one's been wishy-washy and hasn't happened. I guess you could look like this too. It's been a choppy mess. But we'll see what happens this time. Maybe it goes, and maybe it continues. So it's got to start somewhere. So I'll try and stay with it, and we'll maybe give it to today's low or something like that. Bank of America, we talked about it finally waking up also. Lots of deposits in this stock, meaning, if they have a lot of cash, in their asset, whatever, a lot of assets, and rates go up, they start making more money. So this was when it woke up here, and then it held in there, cleared this, ticked back the 200-day, and now it's coming back up. So it's nice to see this woke up. I avoided this one. Probably should have went with it, but it's been a laggard, and it still has a long way back to highs. But if you look at it week by week, here's your igniting bar. Here is your commitment to it above this descending channel, inching up, little follow through. This week in this stock could have made you a good percentage move, and it doesn't happen often. Let's see, someone was talking about GE today. Nothing. AIG. Yeah, big move back to the highs. It already had its 3 days. And then you go into high beta tech, which is not the easiest thing. A lot of people went long Apple on Friday, gapped up. What's the rule? Sell a third, see if the composure stays. I wouldn't say it's the end of the world that it didn't have a rock star move today, because it's still a little bit question mark. You have this big range here, and we talked about it failing to hold earnings resistance, earnings momentum area 133, 3 days down. Here's your small bounce back. So now I guess let's see if it could hold here. If it could hold the top third of this and go a little sideways, maybe at some point it can clear that. But today, if you were long it overnight, it went through 130.13, hit a high of 130.57, which I talked about in the morning, saying it will reclaim or get rejected by this, and it got rejected first time. So that was your sell signal, not to signal while it went red. And if you sold it up here and you bought it back a little on the close, which was $1.30 lower, you'd be in small, and then if it holds here, perhaps it starts to hang in there with a little bit of a flag. But again, I'm anticipating. So I went small. Actually, I actually shorted this today and made peanuts. But at the end of the day, I nibbled a little bit long. I don't love it. I'm not in a full tier even. And at some point, if it would reverse a little bit, maybe tomorrow if we do open down a little bit, then I would add to it and then figure it out. Amazon gave you a little follow through and sold down. This is the type of market I guess we're in, where you get a small reversal here. It gave you a bit of a follow through move, $4 or $5, and got rejected. So if you sold some, great. Day and a half moves, that's a sweet spot. We haven't had a multi-day move in a while. So now we'll see if this can go sideways. Netflix is still just hanging out, getting tight, wearing people out. At some point, it should resolve. You would think if we break out to the upside, which we're not sure if that's going to happen yet, it would, it would do so, and this would be in the game for that. So I'd say as long as it holds above 552-ish, you got to be looking somewhat constructive on it. The 8-day caught up. It's still above the 21-day. It still has the whole earnings gap. So we'll see. I got along a little Google. I don't love it. you know, you had a small red dog reversal on Friday, and then it tried to get a little follow through today. First time it actually traded above a prior high. Didn't really hold on to it well, but we'll see. You know, I talked to some institution guys, and they keep telling me that the institutions love it, and it's going to be at new highs. I don't see it yet in the charts. You know, it's still stuck in this range, and it's capital intensive. It's not that exciting. And at some point, maybe it wakes up here. You know, it tends to be streaky, but until then, be very light on your feet. Facebook, you know, it's still weak. We talked about you know, what would go on after earnings, and you know, nobody truly knew. And then, at least if you're a technician, you saw this happen. You saw it trade above the prior high, run out of gas in front of the all-time high, and reverse. That told you to get out of this stock on a very active basis, maybe even on an intermediate basis. That's a nasty candle. And what's happened since? Boom, boom, boom. And even today, didn't really, you know, didn't even rally with the market. It tried to go. And if you look here, let's go to the weekly chart. You know, obviously, I just want to show you the cup and handle here. Look how tasty this was back in the day. I wish we could find some more of these. If you see one of these, email me at scott@t3live.com, and I'll take a look at it, and maybe I'll include it in the next morning call. But this is an unbelievable cup and handle pattern. Gap up, held sideways, and then look at all this nice move. So anyway, from here, you know, some do it draw from here. It's kind of breaking a little bit. It's right on the trend line. So with that said, if you know there's no catalyst and earnings are behind it and this and that, it could see the 75 again. You know, and if you go to the daily chart to see where that trend line is, I talked about in the morning call. It's now on the right side of it. Okay, this is you know, this was the outside day right here. Here's your lower. This is the trend. It's the longer it stays below, I would say 80 or 80. You know, if you want to be short this, if you don't want to be perfect, the longer it stays below this 81, the higher the percentage that it might go sideways, build a bear flag, and then continue down. So if you're trying to buy a dip here, be careful. I would go level versus level, not just cost average, because it's, you know, $5 off highs. Again, you go to the weekly chart, it's $5 off highs, but you know, look where this thing came from. It's come from a lot lower. So, and it's just starting to bend into the 8 and 21 day. It's starting to turn down. So, be a bit careful. You know, Twitter also didn't have a great bounce today. It was up $1 on the whole Periscope and Mayweather fight thing, and PS, you know, closed near lows. So, you know, if you do look for follow through on situations, you know, this looks like the ultimate bear flag. Here's your pole. Here's your flag. If it were to break below 37.37, you know, could see the lower end of this range. Me personally, I probably won't be shorting that. I'll be looking maybe for a red dog reversal or something. But you know, this range broke. This trade changed. That's why you take options into earnings, so you don't get caught in something like this. If you took it into earnings equity-wise here, you had a big winner. And if you held it, now you're back to where you were. If you traded it, there was a lot going on. Okay, at least hopefully if you took it into earnings here, up at this area, you didn't have the same tier size, because obviously a lot harder to duplicate a move from 40 to 52. Nice big percentage. So anyway, here's where it is. Let's take another. You know, it's yeah, it's a different trade now. Different trade. LinkedIn. Let's see what you're doing. You know, I think it got upgraded today and really didn't do much. Got a big island top. You know, this is what you call it. Look at all these people are trapped. Trapped. Gap up, gap down, below the 200-day. Nasty. So now you have these two little down bars developing a range. And at some point, I guess, if it doesn't rally in a little bit, you could press this below 198. Next level here is down in the 180s. That's where it was after hours. If it hangs out in here, and I don't know, maybe something changes a little bit, there could be a trade into the gap, and that would just be for cash flow. So, you know, that's it. When I love this chart, it looked very similar to your Facebook, right? Remember this cup and handle on the weekly? Here you go. This is what you want to find in the beginning, the first year or two of a stock. You know, boom, boom. I remember when it traded above this, I was in the calls. It was a great day. When it continued, and then up here, better come out with some blockbuster earnings in order to support such a high valuation. Now I guess let's see what this looks like. You know, just doing it on a blind eye here. Yeah, look at that. Maybe it does see this 186 and you get a trade down and then maybe even a buyable move. So we'll see. And that's it. You know, it's Monday. You know, a lot of people got very bearish last week, including me. I didn't get so bearish, but I got pretty flexible and tactical. And then on Thursday into Friday, I was short. I wanted to prove again to the Twitter sphere, look, Red Dog can make money short. And it didn't work. The market bounced right back when Gartman came on TV and said 8% lower. Obviously, that hasn't worked. So whatever, I'm just playing around. So at this point, I'm kind of back to neutral. I'm trying to be in some stuff. I actually have a spider short overnight because I'm in 4 or 5 longs and going to see if we could hold and go sideways and have a few inside days. And then perhaps if that's the case, we could have a healthier breakout above that 2120. A lot of technicians are out there calling for it. And it does feel like it should happen. It's just a matter of if it does. And just be on alert because there's just day and a half, 2 days, 3 day trades, and it just hasn't been more than that. At some point, maybe we'll get traction. Until then, you know, create cash flow, know your time frame, and just keep moving those feet very quickly because it's been helpful. Have a good night.